Hello everyone, welcome to another Baker Boyer monthly market update. I'm Tyson Romanick, Senior Portfolio Manager here at Baker Boyer. And I just want to go over a couple insights with you guys about the economy and specifically inflation. Now looking back at 2023, it was a great year. The economy was surprisingly strong. Markets rallied, and inflation, even though it might not have seemed like it in the supermarket, has come down, and that just means that prices aren't rising as fast as they once were. So what does this mean looking forward? Does this mean that we've navigated a recession? Inflation is not climbing at 9% year-on-year basis, or are we kind of past it all and we're just off to the races? Well, that remains to be seen. There is still a chance we could be in a period reminiscent of the 1970s. Kind of looking back after specifically the oil shock of 1973. And in that time period, inflation was cyclical. It rose and fell and rose and fell. And you can see that in this chart that we have here. The blue line is inflation, throughout the 1970s and what it did. And then there's the black line kind of overlaid there of where we're at today. And you can see, we're kind of in a similar spot. I'm sure there were a lot of people in the 1970s and specifically 1974, 75 who thought all that inflation was behind them and they avoided a horrible situation just to see inflation come back. Again, we don't think that that's the base case of where we are now, but we still have to prepare for that. Right now there's widespread optimism when it comes to the Fed and inflation, and we did kind of foresee this in our 2023 economic update outlook. But that doesn't mean that it's all behind us. We still have to prepare our portfolios in case inflation does come back. So how do we do that? Well, there are two ways we did it in 2022. One way is we added commodities to the portfolios, and that helped protect the equity side. And then for the fixed income side, we had inflation swaps. And the good news is right now those things are fairly affordable and not very expensive to add to the portfolio. So right now in most of the portfolios, you have some sort of protection against inflation if it does come back. So, again, reflecting on the past, looking at the 1970s and the similarities between then and now, we kind of want to look at some of the causes that could make us face inflation again, and what were those and what are those. So one of the things is, political unrest. Right now in the Middle East, there's a lot of conflict going on, and that could cause inflation. It could cause oil prices to rise. It hasn't yet, and that's just because right now there's other political dynamics or economic dynamics. Mostly China and Europe are slowing down, so that's kind of dampened the demand and kept oil prices low, but that doesn't mean that'll continue in the future. Another risk could be the Fed. Now, they've done a good job. They were a little bit behind the curve in 2022, but they kind of got on things and brought inflation down in a meaningful way. But if they get overconfident and start lowering rates too fast, too soon, that could cause inflation to return. So we also want to be mindful of that. So in summary, we are embracing this optimism when it comes to markets, but we do want to proceed with caution. So if you have any questions, as always, please reach out to your Baker Boyer team member, and we'll see you again next month. Thanks.